Well, hello, hello, hello. Good evening, everyone. I hope we're doing well and we had a good evening or good weekend thus far. Did we have a good evening thus far? Let me open my camera back up. There we go. Howdy doody. Howdy doody. I know you're probably seeing the YouTube ads right now, so I'll give a minute for YouTube to show you the ads and bring you back to the session so we can see what's going on, see what this week holds for us. What did last week hold? Y'all see I'm a little stuffy. My allergy started acting crazy today, and I'm trying to, I took a little decongestant, see if that would help it some. We'll see if it kicks in. See how that goes. Okay. Hoo. Good evening, everybody. Tell me in the chats that you say hey. Everybody wave at me. Hey there. Hey, Mr. Ray. How you doing? Uh-huh. Hey there. I'm making sure I've got us up and ready to run. Making sure we're ready to go right now. Okay. Wonder what that said. Good evening. I was thinking about VWAP and where VWAP is. I think it shows up on VWAP shows up on TradingView, but doesn't show up on Thinkorswim. Is that the way it goes? It shows up on TradingView, but not Thinkorswim. I think that's exactly what happens. I know it shows up in one place, but not the other. But not on Thinkorswim. Okay. So let's talk about how our trades went last week. Let's talk about how did things go? Did we make some money? Yes. Raymond said he's going back to New York in January too. $37 on Spirit. Where do you live now that you can get this New York for $37? Hey, Miss Deborah. Hey, Ward. Hey, Marcia. How y'all doing? Happy Sunday. VWAP is on the studies on Thinkorswim. Yeah, it does show up on both, but because SPX does not have any shares, I think the VWAP calculation thing doesn't show up on Thinkorswim, but it does show up on TradingView. Boom Wolf said it got wrecked last week. Yeah, they'll put credit spreads last week. Almost, I didn't even go through the list to see which was which, but the put credit spreads, because last week was basically a drop week. We ended up with a lot of put credit spreads being breached last week. I had MU and I had WIN. Now on MU, my call credit spread, no, the other one. On MU, my put credit spread got breached, but on WIN, my call credit spread got breached. WIN had, and this is a good lesson for all of us to do. Hey, Carolyn, to make sure that when you are looking to trade something for the week, that you look to make sure it doesn't have X dividend along with looking for earnings. So we usually look at earnings, not necessarily look for X dividend, make sure when they're going to get their dividends. But WIN gave out their dividends last week. And when, of course, dividends are coming up, people are buying it, running it up. Of course, as soon as the dividends were paid out, the price fell back down. Like Wynn was up at, I put on the screen, Wynn was up at like 93 and some change. It went as high as, what was this, Thursday? It went as high as 95, right? Went in, almost filled the gap that it had. It went up high. I had like 89.90 on my call credit spread. So on Thursday, though, what I did was, oh goodness, come on. What I did was I went ahead and closed it because I saw that it probably wasn't going to come back in terms of, I had 89.90. So I had like down in this area. And once it gapped up on Thursday and then kept moving Thursday, I was like, this is probably not going to do its thing. I told you it had a gap here that like it got almost all the way filled. So after the dividends got handed out, they fell back down. Notice here it went back down some more. It actually ended up closing at 90.74, which still would not have, which still would have had my trade be breached because I had 89.90. I still would have been breached. But after I saw it gap up here, I was like, yeah, this is not going to go for me for Wynn. This is what I had. I had the Wynn Iron Condor. So the call credit spread side ended up getting breached. My put credit spread side was fine. I also had MU. On MU, the opposite happened. On MU, I had an Iron Condor again, and my put credit spread got breached on MU because the price fell like it did. Prices fell. You can see here from Thursday to Friday. I think I might have closed it on Thursday as well. But those are gaps here that are yet to be filled all the way. They got a little bit of filling, but not all the way. Okay, this gap was filled with that. This gap is now a gap up and a gap down, which is all in the same place. But it's not finished. This part of the gap is still remains to be filled. That's what happened to MU. Selena said multiple spreads were breached and I got assigned. I put a video, Selena. I hope you saw that video of, it was, I got assigned. I put it in our, let me go see if I can find it real quick. But I went and put it in our Telegram group. It was a group about basically a video about what happens when you get assigned. Like, I think it was called, I was assigned. And there's basically talks about what do you do in this situation when you get assigned? Like, how do you handle that? Basically, if your account can hold 100 shares, then you will have the 100 shares. If not, then the account will just close the other side and you'll just pay max loss. This is the benefit of having spreads. When you have spreads, the benefit of that is that trade is worth no more than the width of that spread. So if you've got spreads, then, and it's a one spread, that trade is worth no more than $100, no matter what happens, assignment or not. If your account can hold 100 shares, if you have the money for 100 shares, they're going to give them to you. But if your account can't hold 100 shares, then they're just going to exercise the other options contract, and then you're going to pay just max loss. Okay. Hey, Lisa. Hey, Tanya. Hey, Marcus. Hey, Jermaine. And hey, Jamie. How y'all doing? Let me grab this link right here. I'll put it into the comments. This is basically a video I did about, what to do when you're assigned. Nothing to worry about. Really, I know it feels uncomfortable when it happens, though. You're like, oh no, I got assigned. When it first happens, it feels like the world is coming to a close, but it's just a minor move. It looks funny though when you first open up your account and show that it's got a huge negative, and you're like, what? No. Of course, that happens one time. After it happens one time, you don't even get excited about if it happens again. You don't even get excited. Not at all. Good evening, Jamie. How you doing?
I'm doing all right. How about yourself?
Good. Were you watching some football?
It was not.
You were not? Oh, okay.
No, my team won already.
The Steelers won already?
Yeah, they beat the Ravens.
Did they? Oh, my stepdaughter's
Yeah.
not gonna be happy about that.
Yes, I am.
You are, but my stepdaughter's not gonna be.
Oh, well, I'm happy that we won, but I'm happy that the Ravens lost as well.
Oh well, you're not a fan of the Ravens
At all. Can't stand
at
them.
all.
Hated
Hate
it.
fandom. Really?
Can't
Wow.
stand them.
Why?
They
Why
are
is
our,
your
they
feeling
are
so
our
strong?
nemesis.
Oh, they're your nemesis. I was gonna say, why is
Yes.
the feeling so strong?
Yeah.
Just because they're your nemesis?
Yep. They have been since 1996.
What?
Yes.
Okay. And them people, the Steelers people, is so serious about their fan girling. Or
Don't even. You're not exaggerating.
I know, I know. Max loss is the spread. If the spread is 1.5, would you pay 150? Yes. So if whatever the max loss of the spread, well, you're gonna pay the 150 minus what they gave you. So whatever they gave you, um, you can subtract that from the max loss. What's ONG? Is that the what? I don't know what ONG is. Maybe you're trying to say M. Now I was torn between the Steelers and the Ravens because I'm a chief for Lamar, but the Steelers is my team. Y'all know I already told y'all I'm a Steelers fan. I'm a bandwagoner. Marsha said her heart was broken at the Bears game. Uh, Jamie said, I understand. Tanya said, listen, I cannot believe the Bears lost that game. I'm so mad. The Bears been struggling for a while, though. Had the Bears team been kind of, struggling for a minute?
Right, but this season they kind of started coming back around a little bit.
Oh, okay. They're doing a little
Yeah.
better.
Yeah, they
Oh,
was, they have their flashes.
okay. Got you. All right. Well, on the screen, we're looking at SPX. This is what SPX did all last week. Definitely ran up, hit a sell zone, and came right on back. It left a gap above it, and there's a gap below it. So SPX has to now make a decision. Where we going? Where we at those? Or where this just going? Much like Jamie said it yesterday, I think it was yesterday, the meetings are starting to run together, but Jamie said he thinks it's probably going to base it here for a minute. And I wouldn't, I wouldn't refuse that. I agree it could probably do that because of the fact that it's stuck between, it's kind of torn between two lovers. So you have to decide which way you go, which way you go with.
This looks like a head and shoulders formation, though.
Don't do me, Janae. Yes, it does. Janae said she want me to name somebody on the Steelers team. I don't know anybody on the team. I told you I was just bandwagoning. I told you I just. Oh, it looks like a head and shoulders. Where's the head? Let me focus. Where's the head and shoulders? This is the head. You saying? And this is gonna be the shoulders.
The left shoulder is already there. The head is where it just formed over the
So
past
now,
few days.
okay. So it's not a head and shoulders yet. It's a shoulder and a head.
And I'm saying that it looks like the first half of the formation.
Oh, the first half. Okay, I thought you said it was a head and shoulders formation, but it's just missing the other side.
It's
I
missing
got
the
you.
other shoulder, but it looked like
It could
that's
be
what it could
setting
be.
up. Yeah. I got you. Got you. Tanya said Tomlin brought me to the Steelers. Oh, she harassing Tanya. You ain't harassing me. See, I thought you was harassing me about not knowing nobody. I don't because I'm a bandwagoner. Okay. All right. So this is what SPX had going. I put a little bit of a few lines on the chart just for us to see what may happen next week. I'll put a line here at the top of that gap. And this gap is going to have maybe a little more room. It's not necessarily just going to have the bottom of the gap as support, but it may have like a halfway point, which tells us there's some stuff in here. You can see these lines here so that there is some support and resistance even in the middle. We can go with that. Okay. So that's where we are on SPX. Maybe a good week, not financial advice, but if it bases out for a minute or coils, as Adam Mancini says, it might be a decent week for some iron condors. So Curtis says head and shoulders would be bearing, would be your bearing or would be your bearish move. Um, Yeah. Friday was an inside day of that Wednesday bar after the election. Yep, it sure was right here. Friday was inside. Well, not quite inside of this day because the wick is at the bottom. So it's really a two down, but it's as far as open and close, it is inside. Okay. Cool, cool. Let's go look at triple Q. See what it's gonna look very similar to SPX, obviously. They kind of all look the same. Y'all look alike though. Y'all look alike though. This is triple Q. This is what triple Q looks like from last week. It's got a gap above and a gap that's yet to be filled below. It hasn't finished yet. Come on. There we go. This gap is partially filled, but not all the way. Okay, we got a little bit left here at the bottom that is still remaining to be filled. This is what triple Q looks like. Again, looks a lot like SPX. Just has gap. So if we looked at what we could do, I mean, what the lines look like on triple Q, probably would see the top of this gap. Also, we got enough stuff kind of in this gap here. Smaller time frames may give us a little more insight on what's going on, but we do see we do see, I wanted to go to something else. There we go. We do see some resistance, our little resistance zone right up here at the top. 515, but now we're currently at 496. Okay, currently at 496. Perhaps it'll hit the rest of this gap and then turn on back around. I was going to see if it had a trend line we could look at. Does look at that. Come on, give me the line. Y'all see that? Rising wedge. What is a rising wedge? Takes us higher or drops out of here? Jamie, doesn't it take us higher? You kind of don't know, huh? Goes in here. Then what?
Rising wedge is normally a reversal. So, I mean, if you're judging it from that far back, I guess so. I wouldn't have seen it as a rising wedge, but
what would you see it as?
Well, I wasn't looking from that far back.
Mm-hmm.
Normally with a rising wedge, you will have. I've seen the lower lows, but normally the highs are kind of the same going across. With this one, it has higher highs and higher highs and higher lows.
Okay, but it is still narrowing.
Say it again.
But it is still narrowing.
It's still narrowing, but the direction that it's narrowing in, I don't see a match for it on the chart, on the formations chart.
Okay. Okay.
You know what I'm saying?
Yeah, I do.
I was only looking at the more recent within the past, let's say 2 weeks.
Okay.
Or let's say within the past 2 months. So that's why I was saying head and shoulders. I hadn't zoomed out that far to where you're looking.
Uh-huh. All right. This is triple Q. It's caught between a couple of gaps. It needs to finish this bottom one if it's going to do that. And then it's got one above it. So it's going to have a little bit of resistance to work against too. All right. Let's go see what IWM did last week. Had a big old gap that now is 2/3 filled, not quite. This is what remains of the gap. IWM look a little bit like SPX and those. It went up. Everybody gapped up last week with the election and then it's fallen back down since then. I'm sure I put that there for a reason. Just gonna leave it there for now. Down to the middle of this gap, there's some resistance or support right in here. It's gonna be support. Right in there. Let's see what we see. We're right into a support area, support zone. It's got a little bit of room, but it's coming right into this support area. Another support is at 222. Currently, it's at. You know what, though? One thing I see about IWM, it likes to stay where it likes to stay. It doesn't. IWM might push out a bit, but it'll come right on back in. See, if we look at IWM over the longer term, it's been in this same zone for all this time. And then it popped out a bit, got a little action, and it's coming right back into the zone. Well, potentially. I mean, it may hit this support of the gap and go back up. It may do that. But at this point, it's coming right back into the area where it's comfortable. Where it is comfortable. All righty. I asked about last week. A few people said they got their put credit spreads got wrecked last week. I will encourage you all to make sure if you're doing credit spreads and stuff, no matter what you're trading, to be honest, that you have some type of stop loss plan. Whether that's, if you're trading as a buyer that of a certain percentage, you're going to let it go. Or if you're trading as a seller at a percentage or at a dollar amount, you're going to let it go, or the location on the chart. But to have some type of thought and plan in place for when and if you need to pull the trigger to turn off your trades. Okay, you need to have a plan ahead of time. Oh, there we go. You have a plan ahead of time as to what it is us going to do. What are you going to do? All right. Let's look at the meetings that are coming up for next week. Jamie, are you going to talk tech on the earnings or am I going there? Earnings is coming up after this.
I'll do the earnings for tech stuff.
Okay. So, Tomorrow, we're going to have FOMC member Goolsbee speaking at 10, National Association of Home Buyers at 10. The G20 meetings are all day 1 tomorrow. 4 o'clock is the tick long-term purchases. Market is closed by then. But Tuesday, before market opens, building permits and housing starts. Day 2 of the G20 meetings. And then 1:10, we'll have FOMC member Schmid speaking. Okay, that's Tuesday. On Wednesday, 10:30, we've got crude oil inventories. That's an orange folder, so it will cause some volatility. FOMC member Cook will speak at 11 and Bowman will speak at 12:15. Then on Thursday, we have our first red folder, which is unemployment claims happening at 8:30 a.m. And the Philly Fed Manufacturing Index also at 8:30 a.m. This is before the market opens. We've got 8:45, FOMC member Hammock will speak at 10, existing home sales and CB leading index, orange folder. 10:30, natural gas storage. 12:25, Goolsbee will speak. 12:30, FOMC member Hammock will speak again. And at 4 o'clock, FOMC member Barr will speak. That's all Thursday. And then Friday morning, 9:45, right after the market opens, we have flash manufacturing PMI and flash services PMI. Those are going to, potentially cause some volatility. They're red folders. 10 o'clock, University of Michigan. Looks like now, remember, University of Michigan used to have a red folder. These used to be red folders, and now they've decided, I guess, in reference to other things, they're not as red or as highly volatile as one would have thought themselves to be. And then at 6:15, we've got FOMC member Bowman speaking. So during the week, we've got 2 red folders. They come Wednesday and Thursday and Friday. I almost said Wednesday and Thursday. They come Thursday and Friday. Doesn't mean that the crude oil inventory on Wednesday or the building permits won't matter, or that the G20 meetings won't matter. We've got some things happening. You already know. We've got, as Janae would say, geopolitical things happening. So that those always cause issues and things that happen in the market. So we want to do as we always say, and that is trade what you see. Trade what you see. You want to have a plan. You want to have a plan for your trade, and you want to trade that plan. All right. Have a plan for your trade and trade that plan. All right. Jamie, if you're ready, the floor is yours.
Yeah, give me 1 second. Alrighty, people. We're gonna do. So here's what I got. There's quite a bit going on for our earnings on next week. So the first thing I want to point out is for those of you who are into Bitcoin, you're going to see a lot more because of the election. Probably going to see a lot more Bitcoin related tickers. BT came up probably a year ago, maybe even definitely within the past year and a half. We hadn't seen that. It was probably at the end of the last Trump administration, now that I think about it. But also BTTR, all those is going to be tied to Bitcoin. So if you want to, I don't want to say half pay attention to it, but even though they're not the top dogs in the Bitcoin space, they are still ones that are in the actual space, if that makes sense. So that's going on before the open on Monday. After close on Monday, of course, you got trip.com, but there is software related on the tech side, Zenvia and 3 Verticals. Some of these software, tech software that you haven't heard of is starting to pop up because of AI. And there's certain things that I will say the 2 that I'm starting to see is AI and robotics related. And so some of those are going to start popping up. And you could tell, outside of the fact that they may not be ones you've heard of, but when you go and check out the stock price, you'll see that a lot of these might be penny stocks because they haven't, they haven't been the top dog at all. So they're starting to get some shine, but some of those have come to the forefront also after the election. Trip.com is also reporting. We're aware of that on Monday after close. We've heard of Walmart. That's Tuesday before market open. Lowe's is also on Tuesday before market open. Keysight Technologies, which is on the hardware side, they're reporting after close on Tuesday. All right. We have some other ones that y'all probably want to be aware of. Xpeng, who we used to actually pay attention to. I would almost call it back in the day, but they kind of fell off a little bit, I guess you could say. But they are definitely on that list as well. On Wednesday, NEO before open. Target is also TJX before open, but Wix, which is under the software side. And again, software could be software infrastructure, software application. Those are kind of in the same vein. I'm going to ignore Zim. Had a bad experience. We're going to move on. After close is what we're going to see.
They're at $26. Zim is at $26.
Well, congratulations, but that don't help the situation I was in.
Me neither. I was in the same situation with you. So
Lord. No. After close on Wednesday, for the hardware, we got NVIDIA. Of course, they're going to be reporting. Snowflake, Palo Alto's network. Those are both considered on the software side. So that would be the day we see probably the most quote unquote heavy hitters in terms of tech. Going to be happening. Duos Tech is at the bottom there. They are also on the software side in technology. Thursday is Baidu and Pinduoduo. Both of them are going to be reporting before market open on Thursday. In terms of more tech, another one some of us probably have not heard of regularly is Elastic after close on Thursday. After close is Elastic. Intuit is also reporting, and NetApp. NetApp is more so on the hardware side. Intuit, some of you probably have already heard of. And then Friday is actually they're more software related. Global Blue is Friday before the market open. So we got a little bit of everything that's happening. But the names that we're normally used to hearing, I shouldn't say we, the names that most people are used to hearing, the big dogs in tech, some of them are already reported, but some of these new ones that you haven't heard of are, I would say, we're probably going to start seeing these on these type of lists just because of the Trump administration, and some of these different tickers will start moving to the forefront. Wix, everybody knew about Wix. Wednesday, they report before the open, so a lot of people were already aware of them in terms of what they do for websites and things of that nature. But I don't consider them to be something that can sway the market, let's say. But I would imagine that Thursday morning, there may be some, volatility because of NVIDIA, but Snowflake and Palo Alto's network also, all three of those together can probably do something. So that's what I'm looking at for this particular week.
Yeah, I was gonna say that you kind of played down the NVIDIA thing.
I wouldn't say play it down. I just kind of look at it like I look at NVIDIA like what I think is going to end up happening. Like I said, if no matter what I learned with NVIDIA about maybe 2 years ago is they can smash earnings, but if their forward guidance is lower, their stock price can drop.
Right.
So I look at NVIDIA like, if we're talking about, this is Russell 2000, which we can say the same thing for SPX, but I'm saying if anybody's going to be able to push the market down past this this support level with this gap here, it would be NVIDIA news. You know what I'm saying? Because it would be pushing it past the support area. So I kind of look at it like, yeah, they're reporting, but even if they smash it, that doesn't mean that the stock prices will go up.
Right.
Which is kind of, to me, that's weird, but apparently that's just how the market works.
Yes. Well, you talked about the other day that you can smash earnings, but if your forward guidance isn't such that people are excited about, then they're not excited.
Yeah, they'll just start selling, which, we know, let me say it this way. We know that they got the product that people are buying.
Right.
Because they selling $30,000 semiconductor packages.
Yeah. Yeah. They said somebody get paid.
So we know somebody got some money somewhere.
Somebody getting paid. That's the truth.
These cats got some coins in their couch cushions, is all I'm saying.
Oh, goodness. Well, I guess that'll work. That'll work.
Yeah.
That will work. All righty. Thank you for that. Appreciate it. Sharing with us what's coming up in earnings. Last week I put a video out. Actually, I put several videos out last week, but this is one of the ones I put out. The 3 ways to get more money for trading. Because as a trader, we're always looking at ways that we can grow our trading account. And your trading account doesn't just have to grow from trading, right? It can grow from deposits, which honestly, many of you should even consider making your trading account or your investment account, because it's really an investment, and many people already do, but this is really a part of your regular investing. So your trading account that you're working with can grow by you selling items and putting them in there. I mean, there's so many different ideas and things you can do. But anyway, watch the video. You can watch the video and see. I don't know if I saved the link, but watch the video and see. No, that's not. I want YouTube and see what kind of things are there. It might spark some thoughts in your own mind as to some things that you can do for yourself to grow your trading account. Again, the trading account doesn't have to grow only by trading your way up or grow only by profits. It can also grow with deposits. Let me see if I can find the link really quick. See if I can find the link. Who's got some ideas as to a way that you could grow your account? I mentioned as I was talking, put them in the comments, by the way. I mentioned you could, go through, maybe you have a yard sale or put some things on OfferUp or do your marketplace. Because all of us got some stuff that is we got an overage. I won't say all of us. I can believe that probably 95% of us have things that are in overage in our life. And you could get rid of some of those things, let somebody else buy it, and you can use the money for your trading or for whatever else it is that you want to use it for. I put the link in the comments. But yeah, there's several different ideas. Anyway, watch the video and then, see what you come up with. Again, there's probably some good ideas that would be in there and may spark some things for you. Every week, we are live in the mornings. We're live in the mornings on Monday, Wednesday, and Friday at 9:20 a.m. Eastern Standard Time. We were doing all week, but we made a few changes. We're doing Monday, Wednesday, and Friday live here on YouTube, on Facebook, and on Twitter. All right, we're live in all the places, all three of those places. Okay, this is our trades list for this week. Let me make it bigger. Let's see if I can put it here. There we go. Let's make it bigger. So this week I decided, because y'all already know I'm a big fan of iron condors. And when I was looking through the Peakbot watch list, there was a good number of iron condors that showed up. And this is probably because of the fact that we've had a big, bull run has been going, and then we've had some pullback times, and those pullback days, enough of them have given us this now where all of these stocks are now what's called neutral, and they're neutral on the 50-day moving average. They're being classified as neutral based on the 50-day moving average. So I want us to go through, as you look at these, we're going to look, let's see which ones do we, got my pencil, which ones do we want to look at? What do we want to look at that's on this list? What do we want to see? If anybody got some ideas, something they want to see from this list? And if it's not on this list, you can put that in the comments too. We'll add it on when we can. We'll add it on. I'm looking up at the low risk. AbbVie catches my attention. I traded IYR last week. It has a weird, IYR has a weird bid-ask spread. Has a weird bid-ask spread, 232 and 241. I see IBM is written in the comments. IBM is there. I'm surprised that IBM, even at this place, is a 0.5 or 1 spread. Depending on where you are, you can see that that's 0.5. Some of those are 0.5s. I'm looking at the wrong thing. I'm thinking about that. What's that? XHB. I'm looking at the wrong one. I was looking at that XHB, not at IBM. Let me look at the right thing. Y'all probably looking like, what 0.5 you talking about? Okay, I see 200 and 210. Gold. I got gold on my list. That's good. Hey, Nankali, how you doing? Netflix. We looked at Netflix on the call yesterday. I'll swing back around to it, but we looked at Netflix on yesterday's training call. What else? Anything in the moderate area? Do I see anything in the moderate that I like? Almost don't want to fool up with MU again, seeing that it got me. MU got me. Okay, silver is down here too. Y'all see that? Silver is here as well. 26.5, 28.5. USO is that US oil? Is that what USO is? US oil? 67.5
Sounds right.
and 72. All right. I actually expected more energy companies to be. What's the difference between low and moderate risk? That very good question, Mr. Mac. Low risk basically is that your volatility probably won't be as high. The risk of you getting breached won't be as high. Moderate risk takes it up a little bit. Now, our list has low, moderate, high risk, and very high risk. And I'm sure it's based on the implied volatility, the EV numbers or the IV number being very highly volatile. If it's higher volatility or higher IV, then it's going to be a little bit more of a risk. Thank you for the USO. Okay, I'm going to go ahead and start looking at charts if we're ready. Let's see where we are. I wrote down, let's look at gold first. Oh goodness, I feel like I cannot breathe. Gold. I used to have allergies really bad, and then I hadn't had a problem with them in a while, but it seems like they have decided today is the day. We've got gold here, got some gaps that jump out at us pretty early on in the conversation. Right? Let's see. It says we're neutral in this zone. We've got a gap here that hasn't been filled yet. There is a gap. Okay, go ahead and fill in. We've got some support or resistance. It's actually going to be support now right here at 235 on gold. There is some support there, pretty good little support. It came down and hit. There's very little wick there. And so the last time it was in this area, it basically dropped down to that 235.41 and went on back. Let me make this bigger screen so everybody can see. We can see a little better. Very large. We want it very large. Not sure if that changes this. It just changes these numbers. Okay. So
you're showing us the option seller trade.
Yep. I see. I haven't switched over. I'm already charting and y'all ain't even looking. Thank you. Thank you for that. Okay, so here we are on gold. I marked these couple of gaps here, and actually this one here is extended. It got skipped over twice. This one looks like it got filled by this price action, so we could take this gap off. It was filled by this little doji looking thing right here. What happened, Jamie?
Sorry.
Okay, I see stuff jumping around. Okay, so I was saying that there's a pretty good support back here at September 18th. As it dropped down here, very little wick is down here in this area. So when it hit that, it did a good little, and then it gapped up the next day. So this actually would be for those who mark gaps. Gaps are marked by the close of one candle to the open of the next. This candle closed at the bottom of this red, and it opened at the bottom of this green. That is or was a gap. Now that gap has now had some price action to go through it, but that was a gap and it hasn't filled completely. I'm moving around because it's behind the camera. Oh, y'all can't see me no way. I took me off the screen. But this gap area down here, part of it was filled, but not all of it. There's a little bit at the bottom that remains unfilled, and then a little bit at the top. Well, no, this filled the top, so only at the bottom is some. But the 235 is would provide some pretty decent support there. Okay, so looking at the numbers, I've got 232 and 241 as support and resistance, or the strikes, not support and resistance, but the strikes. 235 is the support here, and 241 and some change would be the support, the resistance based on back here's 10/9, October 9th. All right. And there's a gap above there too. So let's go look at our strike prices and see what kind of, okay, so gold expires 3 times a week. Gold expires 3 days a week. I picked the 22nd because I wanted us to go till Friday. Now you could look at trading gold in the every other day if you want. But you can look at it every day. Are you supposed to be sharing? Okay, we got it straight now. Looks like okay. You could go with every other day, but the list that I put together includes the 22nd. So that's why I picked the strike for the 22nd. So I've got 232. 232 is a 78% probability out of the money. And 241 is an 80% probability out of the money. Let's see what kind of money we could get here. At 232, if we're looking at just a one spread, of course, you can always widen the spread, but at a one spread, we're looking at $14. Let me see where I want to put this. Okay, there we go. Nope, there. Okay, at 231, 232, there's a $14 on that side. $15. I'm gonna put us $1 more up there so we can maybe and again, before I get too far into this, know that this is not the best time to put on these trade entries. You really should wait till the market is open. 241, 242 on the call credit spread side is paying $18. So 18 plus that 15 means we would take in about $30 if it was open right now. You would take in $33, and that would be $33 for a one spread. Okay, that is gold. Sorry about that, Nankali. I know that you couldn't see my screen, but I use the same strikes that I had put on the graphic, 241, 242. What you should always do if you're going to enter these trades is wait till the market gets open, give it some time for price action to do its thing. Do not run into the market at 9:30 as a seller. You don't need to. Okay, we don't need to. Theta decay is our friend. We don't need to run in first thing in the morning to our to selling trades. You can give it some time, see what the price action does, decide whether you still like these strikes or you'd like to adjust it to something else. All right. All right. That's gold. I saw IBM on the list. IBM. Let's go look at the chart. IBM. Make this bigger. Okay, we got a few things on the chart we can identify. First and foremost is this big monster gap, but we're not near that monster gap. Doesn't mean it can't go back up there. Just means it's not there right now. Okay, give me some more juice. There we go. There we go. There we go. There we go. All right, so close of a candle, which is the top of this green, to the open of the next one, which is the top of that red. That's the gap it feels like an earnings gap. Yep. I was told, and I happen to agree, that earnings gaps are the ones that are harder to feel. And that when I say harder, they take longer to feel. That's probably a better phrase. And that's because an earnings gap most likely occurred because the sentiment of the owners changed. Okay. When the sentiment of the owners change, then you're going to have an owner's gap. And that happens a lot of times at earnings, where the earnings came out, the guidance wasn't what it needed to be. And the people who are owners say, we don't quite agree with whatever's whatever, and they may change their sentiment about the company. That means that if that gap had a reason behind it, and that may make it be a little bit longer before it is filled. A gap that kind of happens for, lack of a thing, for no reason, may feel a little faster. All right. So this is IBM. We're looking at IBM is at 204. We do have a little consolidation zone that we've been looking at these few days, right? 2, 4, 6, 8, 10, 12, 14, maybe 14 days. That's about 3 weeks of trading that it's been in this same zone. For IBM, I got 200 and 210. Those are the numbers that I have for IBM. 200 is below this support area of 204, and 210 puts us right in here. Let me see what this looks like on a line chart. There's a clear chair right there at 210.96, place to sit it down right in here. We're not at that place, but that could be a place where there would be some, no, that's not what I want, some resistance. Jamie, if you want to say anything about something I'm looking at, feel free to say. I don't even think you're still there. Okay.
I'm interested in knowing what the moving averages are saying right now for IBM.
Okay. Let's turn on. My moving averages are the 9 and the 20. That's what's here right now. You'd want to see what, the 50?
I was just wondering if, since it's under that gap, I was just wondering if they were providing resistance currently, or if it was providing support while it's pushing it up against the gap.
Well, at this point, they're providing resistance.
Okay.
So they're above, the moving averages are above the current price.
Okay. All right. Thank you.
Yep. So if we looked at our numbers, not there. If we looked at our numbers, I told you I've got 200 and 210. So 200 on the bottom side is going to pay about $36 for a 2.5 spread. That's about 15% return on the money. Yep, that's about 15% return. $36 for the put credit spread side, 197.5 and 200. And for 210, 212.5, another $36. So $72 for a 2.5 spread is about a 30% return. About a 30% return. Okay. I see your question, Jeff. Jeff says IBM is a slow mover in terms of ATR. Jeff says, do you actually put on these trades on Monday in your sim? Actually, the ones that are in my sim, that they actually stay here, and when they pick up, I go back and revisit them in my sim. Some of them I put on later in the week. I don't necessarily put them on Mondays. I may do a Tuesday or a Wednesday trade. My life is so busy and full right now that I don't have as much time to watch trades as I would like to have. So I really only enter like on Wednesdays now. Tuesday, late Tuesday, maybe Wednesday or Thursday. But I have all the ones that I do in my sim that you see me doing here. They run in the sim. Okay. That was IBM, about $72 in IBM, which is almost 30% return on that money, that's pretty good. That's a pretty good trade, sounds like to me. What y'all think? What you think, Jamie, about IBM and the $72?
That was for Iron Condor, right?
Yep.
Yeah, I mean, I wouldn't hate on it.
Of course, iron condors are not to be are entered like all at once. You can enter them all at once, but you get better premiums if you let it leave a zone, whether it leaves resistance or leaves support. As it leaves that zone, you're going to get better premiums for that area or that particular side. You're going to get better premiums if it's closer to one side or the other. Okay. I did IBM. I did gold. Let's look at silver. So since we're looking at precious metals. You're welcome, Jeff. This is a pretty long, it's a pretty long list of trades. That's why I tell people to look at, to check out 3 or 4 of them, 5, whichever, you're comfortable with. Enough that you can watch, because though credit spreads don't require a lot of management on the weekly, they still require a little bit of monitoring. So you want to have something that you can monitor. You don't mind watching on a daily basis or every couple of days. You want something you can look at. Okay, silver also is in the neutral category at this point. Silver we just left this support area at 27.59. Well, it left it and then gapped up and fell back down into it. It's really what happened here. I don't know if I would call this this would probably be the base. I don't know if I'd call this a leg out, seeing that it came the other way. Probably want to wait to see how it does coming off of the 27.59 before entry. You want to see what it does with that. But silver has a very small ATR, very small implied volatility. It's got a tight range, 26.5, 28.5. Very, very close. Basically saying the top of this gap is where that strike would be, and 26.5 is actually down at the bottom. Well, that's not even quite there. It's really more. There's a gap down here. Let me mark it because we might need it. We might need to know what happens here. 26.5 is the strike that I have, and this gap is the top of this gap. Will provide some support, very well should provide some support, but you just need to know that it is down here. It's a buyer's gap, so that means there's buyers in here. It means there's some people who, if it hits this area, some buy orders are probably going to be triggered. And this is a seller's gap. So if it goes back up there, that's going to trigger some sellers in there most likely as well. So 26.5, 28.5. Silver also trades 3 times a week. 26.5, 26. I usually make this into a full 1 spread if I have a 0.5, unless it pays really good. Like actually, IYR paid really good last week, so I left it at a 0.5. But it's only $7 for a 1 spread on silver. I'm not a fan of that. I'm not a fan. I'll put it up to 10, but if it doesn't provide at least a 10% return, then it's not on my list. And 10% is I'm not a fan of that at all. If it's just 10%, I still will leave it off the list. But the call credit spread side, or let me turn this to 29.5. Turn it into a 1 spread. Looks like it's paying $10 on the call credit spread side. So $20 total if both sides pick up for silver. I'm not as in love with that one as I was with IBM. IBM had a little different look to it. Right? Okay. What else did I have on our list? USO. And then I have, I don't know if I saw any more tickers in the chat. Oh, Netflix. We're going to look at Netflix too. Okay, let's go to the chart for USO. Is there anything happening in the earnings this week that would be a catalyst for the oil? Moving averages crossed back over here.
I didn't see anything in terms of the tickers. That's what you
Yeah, I
mean?
didn't either. Yeah, that's what I was talking about. Uh-huh.
Yeah, I don't see any of the oil tickers or anything connected to it right now. That at least that I can recognize.
Right. So the moving averages have crossed back over here. So that's gonna give us a little bit, could give it indication of. Now remember, when you're dealing with moving averages, that they are a responsive indicator. So they're only responding to previous price action. Moving averages is not a leading uh, indicator. It is a reactive, which all of them are reactive, to be honest, not just moving averages. But I do like that moving averages will provide you some crossover, could potentially provide you crossover, let you know whether it's going to keep going down, could potentially give you some exit criteria. I wouldn't necessarily use a moving average for an entry criteria, but I could see where it could be used for an exit criteria. Okay, so there's a gap that is about halfway filled above where we are currently on USO, which is 69.75. And it is right at some support. And there's a little bit more below it at 69 is support. USO, I have 67.5 as the strike down here, and 72 as the strike, which would be right above where these went up and turned around. I guess I could put this as a line because it is a formation that formed. This one here, this is a gap down here. Close of one to the open of the next. This has left a gap behind that still needs a filling. Okay, that's that above the 67.5 strike price, which is good. 67.5 and 72 are the places where I have for USO. USO has multiple weekly expirations. I don't think I knew that. Expires on the 20th and the 22nd. Huh. Okay, what did I say? 67.5. 67.5.
Why wouldn't it have multiple?
I'm just surprised that it would, because most things don't, like, so it's not like a stock. It's not like SPY or some of those guys that have multiples. I mean, gold and silver, but USO is, to me, like, what do you think? Why do you say it would?
No, I don't. I don't. I didn't realize that it was would be a surprise because I don't trade it.
I don't either, but I think almost everything. I feel like almost everything is just weekly, and a few of the things we know are multiple times a week. But I didn't think I know that USO was one of those things that does multiple times a week.
Okay.
We'll take it, right? So 66.5, 67.5. If for put credit spread is paying $18. That's an 18% return there. Let's put it on to GTC and confirm and send. Right? That was 66.5, 67.5. And if you went to 72, 73, you could leave it as a 50-cent spread. The 50-cent spread money don't look bad. Look at that. 72.5 is paying $12. $12 for a 50-cent spread means you're leveraging the other $38. That's a 24% return right there. That's a 24% return. So you could leave it as a 50-cent spread. Actually, it's better to leave it as a 50-cent spread, because when you make it a one spread, it's only $15, and as a 50-cent spread, it was $12. So being a 50-cent spread would be a better return on your monies. Y'all understand? Do y'all understand what I'm saying? That it was at 72.5, it was $12. But when I changed it to 72.73, it's now 15. Okay, so it was the 50-cent spread was going to pay more monies. Okay, 72.73. I'll leave it there and turn in and push the trade on. Okay. Mm, 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 mm. Okay, let me see. My husband was just calling. I need to let him know I'm on my call. All right. So next on our list, we had Netflix. We talked about Netflix a little bit. Now, all of us saw the trade. We've had our discussion about what do we think happened to Netflix. Well, I think the issue was twofold, in my opinion, of course, because I don't know, but my opinion is that Netflix, I don't think anticipated as much usage as they got, which I'm not sure how they would have missed that part. But I also feel like all of the issues weren't necessarily Netflix issues, because if Netflix sends out a strong signal, but you trying to run 3 and 4 Netflix out of your house, or your bandwidth can't contain what Netflix is sending out, then there could potentially have been some issues on the receiving end, not just on the sending end. Because not just that, I had who do I have? Xfinity. I had Xfinity. I have AT&T now. Xfinity has, like, and y'all already know this. I'm gonna probably tell you what you already know about internet coming into a neighborhood. It sends in a certain amount. It says the signal says it's doing this, that, and the third. And you thinking you're getting a certain amount of upload, download speed, but they're sending that to a neighborhood. So if the neighborhood is using all of the bandwidth at the same time, which they would have been using Netflix, then Xfinity is going to send it out. And basically, you better get in where you fit in, which is different than if you have fiber optics, which I have fiber optics now with AT&T. And the fiber optics line is kind of a little more dedicated to a particular person versus everybody pulling off of a hub in the neighborhood, right? So I'm just using this as an example. Let's say that all these people are watching Netflix. Xfinity sent the signal here to 100 houses, and 100 houses are watching it all at the same time, but they're not pushing but so much. So Netflix could be sending it in, could be streaming at the proper speed, but the neighborhood could be, sparsing it out or parsing it out. The neighborhood, the local internet provider could be parsing it out at a lower level. And then you're not going to get it at the same speed that Netflix is sending it. But of course, Netflix is going to be blamed that it was their fault. But even though it could very well, I'm told it's probably a lot of companies who are not going to raise their hand up and go, oh, no, we were the problem.
Well, the other part of the issue is normally when you have an event like that, it's coming through a cable box, right? So now it's coming on your computer, using up your computer resources.
Yeah.
Which is a totally different infrastructure trying to receive that same data.
Yeah.
So I mean, I think what's going to end up happening is they're going to, not just Netflix, but probably most streaming. I would be surprised if more streaming, platforms are not going to try to make sure that they get stuff like that straightened out.
Yeah.
With whoever is providing the internet service,
right?
Because what this showed them, I mean, outside of the fact that it showed them that Mike Tyson is still a draw, so they know what that dude is capable of at that age, but they also know what a large amount of people can do to the internet for a major event.
Who are watching it all at the same time. Absolutely.
Yeah. Because even when they did Beyonce, I think it was a Beyonce tour, and they showed it in the movie theaters. Okay, imagine if they would have showed that same thing on Netflix.
Right.
Or if they tried to do something with Taylor Swift on Netflix.
Right.
There's going to be a bunch of eyeballs worldwide pulling on the same. They're going to have the same problem.
Absolutely.
If they have the same amount, if they have a large fan base, so at some point they're going to have to start preparing for large, major events that can trigger large fan bases like that.
Right. I agree completely. I just feel bad because Netflix is going to get a little bit of a bad rap behind it, even though part problem may be theirs, but I think they're going to get a bad rap. And people, and Tanya says here, call credit spread. Yeah, I mean, for a couple reasons. Call credit spread are just probably going to be a little bearish this week, not just because of the fight, but that's definitely, but people were definitely buying in, if you want to call it that, because of that. And it was, and it was riding it up. All those people who rode it up to the 840s are going to, go pop in Monday morning and start selling. I mean, I just not all of them, but I mean, there's going to be a lot of people who are going to sell shares. And of course, it's the selling of shares that moves the price. That's what moves the price, is selling of shares. Not us coming in with options, but that people are selling their shares. So I do see potentially a call credit spread as well. Friday, it did even pull back. It pulled back pretty good on Friday, too. The range for Friday was 15 points. This is a total of 15 points of downwards motion. Between the open and the close was 16 points between open and close. I think it's about 16. No, it was about 9. From 23 to 32 is 9. Open and close was about $9. But that lets you know even then that there was, starting to be some let it go. We just go wait and see. Now, call credit spread. Now, up here, just so you know, up here is 5 spread. Up here is 5 spread. Up in the boonies, it's a 5 spread. So we're looking here at the options contracts, and we're looking above current price. Current price is 823. If we go up the IV, which is 23 more, that's going to take us up to 846. 847, but that puts us right up here in the 845 range. Even 845 is 78% probability out of the money. 845, and the other piece is this is price discovery because there's nothing else up here. 845, 850. Market is closed, but it's paying $73 for a 5 spread, which is about a 15% return on your money. Paying $73, we can make it an even 75. And put that in, but that's 845, 850, which is a 5 spread. You take in 75. That means you're leveraging about 425 for capital for the week. So, some people who do SPX are a little more okay with SPX because you're only leveraging that collateral for a few days. But if you're doing Netflix, you're doing it for the week, or at least some portion of the days. At this point, shoot, you get in on Monday. If that price starts falling, like it's looking like it's probably going to fall, you'll be out your trade by Tuesday because the price action could have moved so much that your trade is going to be fine, right? Your trade could potentially be fine because I wouldn't even be shocked if there is some IV crush that happens from Netflix. I know the implied volatility had to be up high because of all the stuff that was happening, getting ready for the fight. The implied volatility might have been a little juiced up. And then when IV crush happens, potentially in the morning, then those premiums are probably going to draw down anyway. So they need to go ahead and put some 2.5s up here and quit playing. But it's also time for them to split. Y'all doing it. You're done enough. It's time for y'all to go on and split. And you know what? Tanya says, oh my. Sim trade at Janae. We're basically, this Janae boyfriend. This is Janae's boyfriend. I think Janae might be baying with Netflix. She might be putting her real money. She might be real money in it. She up here. She probably ain't just simming up here. So we looked at NVIDIA the other day, yesterday. NVIDIA is the ship that will rise or sink all the ships. So I would trade wisely this week. NVIDIA on Wednesday is going to have it. It's going to have its share. Okay. So you're going to want to just trade wisely. All right. Just know that NVIDIA can provide a landmine. So you want to be prepared for that. There's a bit of a gap here that was between Thursday and Friday. Got a lot of lines on this chart, and y'all know I can't do all those lines. But I said buy puts below 145.55. If it gets past there, it's where we at now? We're already below. I think that was another day I wrote that. That wasn't yesterday's. Now we've got this gap. This gap here is actually filled. It was filled by Friday's price action, so we can take it off. But then the bottom of that gap did provide support, which gaps do. There's another piece of support here. I want to say this is probably a chair. Let me go change it over and see what the line looks like. Yep, there's something right in here. The 135 area. Okay. But there is a gap here. Anytime you see price changes, color change, you can watch this gap. This red candle closed at the bottom here, but the next candle opened there. So there's a gap down here that Netflix is going to need to close. Not Netflix, NVIDIA. I'm still talking about both of Janae's boyfriends today, ain't I? Yeah, that is a...
Yeah, that's a good question.
What's that?
Who's the boyfriend and who's the sugar daddy in this situation, Janae?
Janae. Janae, which one is the boyfriend and which one is the sugar daddy?
I think NVIDIA got to be the sugar daddy in this situation, Janae.
You think that's the way it is?
I'm thinking that's the one who got the most money.
That's the truth. Ooh.
Janae gotta let us know.
All righty. Whoever brings the most money, the one who pays me, she says. Mr. Max said NCDA. Is that what you were saying? You're trying to say NVIDIA. NVIDIA note was from Thursday, and the stock did exactly what you said. Yeah, that was NVIDIA. It did do exactly that. I remember that note. Yep, from Thursday night. Don't want no scrub. Absolutely. We don't want no scrubs. Ain't nobody got time for that. Ain't nobody got time for that. Okay. That's NVIDIA. Now, NVIDIA is going to, affect some other folks. So just be, mindful of that. I'm going to see one more. Let's look at Coin. Coinbase is not on our list for this week, but because of all where's crypto at now? Where's Bitcoin? 90-something, $95,000? Do we have
it was up there. It's been fluctuating back and forth, but it's definitely been hitting that 90,000 area.
Oh, that's not it. This BTC is not it. It's at $8.
Yeah, that's the wrong
one. It was like 94. My husband showed it to me the other day. Oh, it's crazy. Okay, so here we go. Let's look at Coinbase. Coinbase is at 305. I definitely see Coinbase continuing to do its thing just because it is the access point for the general crypto trader. It is it's the Robin Hood of the crypto space, basically. When I say it's the Robin Hood, no shot against Robin Hood. What I'm saying is the regular everyday crypto person, Coinbase is where they would be their go-to as far as how do you trade it. Those of us, and I say us because I have my little few pieces of crypto are at Coinbase because that to me it was the easiest. And I heard somebody talking about all these different places for your wallets and the cold storage and the da. I was like, okay, that is way too much information. I went straight to Coinbase and was like, let me just put my little few pieces right over here because all that extra stuff was more than I wasn't in that deep. I was not in that deep. But this is the place where the amateur, the average general, the everyday trader is going to look at Coinbase. But definitely you see we've got a upwards trend going on Coinbase. I think Coinbase showed up on the watch list, but it showed up with higher volatility. It's been consolidating here for the last 4 or 5 days, though. Okay, 325. Maybe this will be the rising wedge we were talking about, Jamie.
Where the top rising wedge.
Yeah, but then here we got a ride. This one came back down. This, if we were looking, this is only a couple days, but that end up doing that. So now we got to see how does it bump out of here. This is a 2 up though. It definitely bumped out of it's from a 2 up standpoint. So this is the outside. It could definitely keep going up because I mean, if you follow strat rules, the strat, it's when it got outside day here, the next target would be up here. The next target would be 326. It would go on up back to this area where it was. Let's see what a put credit spread might look like on Coinbase. It's a 2.5 spread, and it's got a plus or minus 36. Woo, daddy. Ooh, daddy. Okay, so plus minus 36 puts us at 341. So it's at 340. No, we're subtracting. Sorry, we're taking away. So this puts us at 270, about 270. Let's go up down here. 80% probability at the money if you wanted to go with that. 80, 78, or 80 puts us at 275, 272. So vertical, I like 275. It's paying $50 for a 2.5 spread. That's a 20% return on your collateral. And 275 puts you at 30. That's 30 points away from it. If you want to go a little bit further, you could go down another. One more would be the 272.5. That's paying $50 as well. Of course, they won't both pay $50 tomorrow when the market opens. They might pay more if the price starts falling down. They might pay more. Do we expect the Santa Claus rally? Well, why not? We've rallied all year. Might as well keep it going. I think we've got a Republican rally going right now. I bought CONY to try to catch some of the coin gains. Did it work for you, Raymond, when you did that? CONY? Did you get any out of that? Did you get any gains out of it?
Not enough work for me. Just to follow up on coin though, just to be aware, because we didn't see it on the chart, but the moving averages are all providing support for coin right now.
Okay. Yeah.
I have a 9 moving exponential moving average.
Okay, let's go back to that.
And that's what it is pushing off of right now.
Right there. When it pushed off of it, when it bounced down, it went down to there and rose back up the rest of the day.
And in that whole area, there's a weekly price point at like 264 and a monthly one at 272.
Okay.
So there's some strong price points in there as well.
Okay. Makes sense. 272 is the bottom of this, right at the bottom of this little red candle down in that area. Ray said I did well on coin call option, but too expensive now. Yeah. Jamie, you trade CONY too? Are you buying it or whatever?
It's a dividend paying stock and it pays monthly.
Okay. CONY.
So I am on the battlefield for my life. Okay. I am straight stacking.
Okay.
Not investment advice, but I can definitely say I shall be in the immediate future continuing my friendship with CONY.
Okay. It does have a gap. It's got to now get through because it gapped down last Wednesday to Thursday. It's got to go back through there. So.
And that is an options income strategy that they use.
Explain that to us.
Options income, the same thing you're doing with covered calls.
Okay.
That's basically what they're doing, except you get your dividend payment per share every month. That's the long and short of it.
Okay.
So your dividend payment per month is going to change because it's based on the fluctuation in price of Coinbase. But at the same time, we are expecting Coinbase to probably continue up in this administration.
Yeah.
So, yeah.
Okay. All righty. Got us a nice little trend line. It's a trend line. Check out Yield Max ETFs. Let's see. Ray said, no, Selena said, add IBIT to your portfolio. I think Randy mentioned IBIT to us, didn't he? IBIT has earnings. Tomorrow, is it the Monday? What isn't that somebody you just mentioned on earnings? Talking to you, Randy.
No, I thought it was BT.
Oh, BT.
Yeah.
It was Bitfarms, yeah. IBIT. Selena, you can tell us why. Raymond says they have coin, CONY.
BT is Bit Digital.
Oh, okay.
And BTDR is it's called BitDeer.
Yeah. Okay, this is IBIT. It's $52. I think I saw NVDY. There's another stock I was looking into. That was the MicroStrategy MSTY though.
Yep.
MSTX or MSTY, one of those.
Probably MSTY.
Yeah. Yeah, I want to say it was probably Y.
If it was Yield Max, it was probably MSTY.
I'm feeling like it was an X then. I don't know if it was under Yield Max or not.
Yeah, more than likely, if there's a Y on it, it's probably Yield Max.
MST, I think it might have been X I was thinking about. Yeah, MSTX is not the one I was thinking about. Yield Max is the Y. MSTX is like the basically the baby of MicroStrategy.
Okay, yeah, MSTY is the options income for Yield Max. That's not the one you were talking about?
No, I was thinking about the one with the X. Yeah.
Okay.
All righty. Okay, let's go and finish out the rest of our run. IBIT is the new ETF for Bitcoin, she says. It's the new for Bitcoin. Okay, let me go. So if you didn't look at you should have seen this graphic. Everybody should have probably seen this graphic by now. I put it at Facebook, I put it on Twitter, I put it in email, I put it in our telegrams. I mean, it's in all the places. So we should be able to should be able to see this. It's all iron condors this week. Now, of course, you can check with, if you get the alerts from Peakbot, you get alerts every single day. Alerts, actually, it's available every day. You don't, it's not like you get them. They're available to you, and those alerts update every 5 minutes. You've got a list of the trend spreads there and a list of all the different, well, let me just go look at it. So that way we're not just talking about it. Y'all can see what I'm talking about. Instead of me just talking, you can see what I'm talking about. Okay, let me put on let me bring this back to the screen. This is for those who have sometimes when you're looking for trades, right? You're looking for what it is you'd like to trade. Use Peakbot offers these alerts. They're $5 a week. These alerts are, and all day long, this credit spreads trend. This trend spreads watch is here and available all day, all week, every 5 minutes. It updates. If it's only got the one side, this is the put credit spread side. If it only has this open, it's the call credit spread side. If both sides are open, like ARM is open on both sides, then it's an iron condor. Now, I wouldn't necessarily do an iron condor on something that is related to NVIDIA, not for the week, because NVIDIA is probably going to move them one way or the other. I just would want you to be wise and be mindful. And down here, if you were trading iron condors on the indices, these are the 1 DTEs. Oh, by the way, let me put myself back on the screen so I can tell y'all something. Okay, put yourself back on the screen. There we go. Peakbot is testing out now a 0 DTE strategy for iron condors. You can put us on the screen, it's fine. They're testing out a 0 DTE iron condor strategy that would be entered around 2:30 Eastern Standard Time and would be set to expire worthless. So that's in the testing right now. So I'm excited to see what the testing looks like. I'm excited to see how that plays itself out. Maybe something, a lot of people in our community like those 0 DTEs, but of course nobody wants to be breached. I don't like it either. I do not, but maybe they got a strategy that's going to help us. I think they're looking at something like a 90 probability out of the money, or 10 delta, something like that, at 2:30, somewhere around there. So yeah, might be worth looking at when the time comes around to look at it. When the time comes to look at it, it might be worth looking at. Okay. Where am I going back to? Go ahead and open it back up. Chart and Trade is up and running. It's been running for the week. We've been running it, and we had a session on Thursday night. I think it went very well. I believe the people who were there also feel like it went very well. Then we had a after party for those who wanted to come to the after party and hang out. We did a little bit of charting and looking there on the after party. We did that. And then Saturday, which was yesterday, we had another little hour of power where we looked at some stocks and stuff yesterday. All right. I have you at the Educator to Trader website is where I have you right now. I wanted to highlight a few things for you. Our membership here on the top left is the Options Seller Zone, learn, trade, profit all the seller's way. This is what the membership has going at this point. Our membership is always open. Definitely got some big things on the horizon. I call them big things because we're going to get even more focused and even more defining to making sure that we get our members into helping them meet their goals. That's all coming in 2025. So if you want to be a part of the membership, you might want to join in. After Chart and Trade is over, I'm not offering another class until the summer at the very earliest. So training and such from me is going to come by way of the membership. The people who are in the membership is where the training will be, not open to the general public. When I say general public, the general public outside the membership won't happen till summer. Maybe one-on-one coaching. If there are people who really want to talk directly with me and they're not in the membership, there's one-on-one coaching you can sign up for. Of course, we have the Chart Your Way to 100K. This is just training on just charting. If all you want is to train on charting, this is an in-depth training on technical analysis and charting and indicators and all that has to go with that technical analysis piece. Options 411 is for people who are new and you want to know the basics. Options 411 is here. This is for the beginner folks. If you're in Chart and Trade, you don't have to worry about this. But if you're not and want to know about the options basics, you can grab that there. Then I have a training class, SPX spreads for daily and weekly profits. It's an options training. It includes how to sell credit spreads, an overview, how to sell SPX credit spreads on the power hour, how to enter in the morning and use the PDT hack, how to use the afternoon and go with expired worthless. And it also includes training on using XSP, which is less collateral there. If you want to learn just credit spreads, there's a credit spreads masterclass is here, just teaches you how to use credit spreads, which is what we talk about on here all the time. This credit spreads masterclass is where you can really learn more about that. If you want debit spreads, there's a course for vertical debit spreads. If you want to operate as a buyer, but you don't want to pay flat out money, then you want to maybe spread it so it just doesn't cost as much. You can do debit spreads with that training. If you like the bundles, I mean, if you like the credit spreads and the debit spreads, you can get the spreads bundle. It includes the options 411, credit spreads and debit spreads all in one place. All in one place here. We've got cash secure puts as a training class, covered calls as an options training class as well, cash secure puts and covered calls. If you want both of those, they do come as a unit in the wheel strategy. The wheel strategy includes cash secure puts and covered calls. Those go together. The PDT hack ebook. So if you are entering and you already got SPX playbook, then you can get in on the PDT hack, or you want to enter and exit trades on the same day. The PDT hack will help you with that. And if you want to get everything all in one place, then this is the option seller bundle. The option seller bundle includes options 411, short selling, cash secure puts, covered calls, credit spreads, debit spreads, or the debit spread, the one is not here, it needs to be up here. And the SPX spreads class is also here. All of the things that are offered, you can get them in the bundle and get it all at one time for, of course, a reduced price. Chart and trade, which is what we're in right now. Creating a trading plan is, of course, here, a little training. It's very short. I think it might be $27. Doesn't cost much. And the basics of short selling. If you want to be a short seller or want to know about how to short sell, then I've got a training for that as well. Trader Products takes you to my Etsy site where there's all the different trader related gear. When do we use credit spreads versus debit spreads is an ebook that I wrote a little earlier this year. And then, of course, I had to leave my Etsy shop one here because I have an Etsy shop and people still purchase that training. Okay. But that's that, right? That's at educator2trader.com. Educator2trader.com. Here we go. Sing it along the way. All righty. I think I covered. There's things to make sure I didn't have anything else on my slides that I wanted to talk about. Maybe one more thing. There we go. For those of you who are trading SPX and you do not have the SPX playbook, or you're trying to trade SPX as a seller, the secret to making 10% profits every single day is a book I wrote. It's been a while now, several months ago, an ebook. It's a playbook that tells you when to enter, kind of helps you with the strategy of how to generate at least 10% profits each day off of SPX. It also comes along with an exclusive Telegram group where we're there offering assistance and offering guidance. You can go to spxplaybook.net, spxplaybook.net. I'm going to write it out in words because Facebook doesn't seem to like that link, so it will block it usually. All right, there's that. There is that. Well, I'm almost done. I'm going to be ready to breathe here in a minute. And this is our calendar. We have a calendar of all the events basically that we do inside of our membership. Part of it now includes chart and trade. The membership piece, I didn't talk about this before. If you're one of our members, you get to come to the trainings that I have. So chart and trade is going right now. If you're in my membership, you get to come to the training. You get to come to the VIP after party. You get to come to the Saturday Power Hour. All the things that we do. When you're a member, you get to go everywhere I go, right? So $97 a month is the membership. And you basically get access to that. You get access to a private Telegram, access to me and my team, or the folks who are there. You just get a community because it's hard to trade by yourself. You need community. You want somebody that if you are stuck in a trade and you've got a question to ask, you need to be able to reach out to somebody and get your questions answered. Now, not shading nobody, but I know there are other communities that cost a whole lot more than $97 that you cannot reach a person if your life depended on it. All right. That's not the way over here. Not quite that way here. All right. So there's our calendar of all the stuff that's going on. I know it's kind of hard to see if you're looking on your phone, but that's all the stuff from our calendar. All right. Don't let FOMO get you. You want to make sure that you're watching your trades and you're not just trading stuff based on what somebody else said to do. You want to trade things based on your own research, based on your own entries, your own exits, set your stop losses, have proper risk management, all those good things. All right. All those good things. Jamie, do you have anything you'd like to add before we wrap up the call?
Nope, nothing to add.
Nothing to add. Okay. All righty. Well, tomorrow morning we will be on at 9:20 for our pre-market call, pre-market into market open call. You can join us again right here at YouTube. And if you're on my looking at the Educator to Trader Facebook group, you can also see the call there. All righty. I will bid you adieu and see you all in the morning. Hasta mañana. Let's stay green and let's get this money. All right. Goodbye, everyone. Bye-bye.